So to kick this channel off, I thought it'd be good to start out with discussing the thought process I had behind a call that I posted on Twitter at the start of February. So in front of you here, you can see the original thread where I made this call. So the first tweet in the thread is just pointing out that we're sort of trying to discover this ascending wedge within a much bigger descending wedge. So this was during the fall. So we're at about 9,000 at this point. We bottomed around here, around 7,600. And then the next tweet is where I say that one of two things is likely to happen. We're either going to break upwards out of this ascending wedge, and as many of you know, Bitcoin does like bullish ascending wedges, unlike most other markets. But we could also break down. And I actually thought it was more likely in this scenario that we broke downwards. And that's sort of the thought process that I'm going to go through in this video, why I thought it was more likely. So if we just hop into a chart here, this is an hourly chart in replay mode, skipped back to the point in time where I posted this tweet. So we can see the bigger context of this descending wedge, and then the little ascending wedge, and the line of the projection that I drew on here. So typically in technical analysis, descending wedges are bullish. We usually break upwards out of them and find new highs. So why in this instance did I think that we were going to break down and find new lows before we found new highs? And in fact, we're actually breaking outside of the wedge in the projection that I drew. So the reason for this is predominantly around how markets tend to work. So we've all heard the saying that 90% of traders lose money. So that means 10% actually make all of the money. So for 10% of the people to make all of the money, what needs to happen? Well, basically, 90% of people have to have a very similar opinion of what's going to happen, and they're all wrong. Okay, so keep that in mind. A lot of people need the same opinion and they all need to be wrong. So now if we skip onto a daily chart, we can see the same situation. I've skipped back to the same point in time on the daily chart, and we have the same wedge. Now, many of you may remember, or you may not, but you can go back and check if you want to, that in many Telegram groups, on Discord groups, on Twitter, a lot of people, when we were making this fall, were calling 7,600 to be the bottom. Before we ever got there, they were saying if we continue to fall, 7,600 will be the bottom. Why did they say that? Well, for first, we have this area of resistance that flipped around into a minor area of support. That was around the time of the SegWit 2x cancellation back in November. So there's some solid resistance there, and as many of us know, previous resistance turns into support. So that was one reason why people thought that we would find strong support. Because I mean, if you look on the daily here, there isn't a lot of support up through here. We just went parabolic. We just went straight up. So the first real big area of support, which was previous resistance, was this 7,600 level. So that was the first thing that people were saying could be the reason for 7,600 being the bottom. Now if we scroll out, just put it on auto so we can see what we're doing, all the way back to the start of 2015, which really is the start of this massive bull run. And we draw on a fib from there all the way up to the top at 20,000. We get this 61 fib, where if we zoom in and take a look at what that price is, that's 76.25. Almost bang on 7,600. And as we can see, the market did probe down and bounced almost perfectly on that 7,600 level, which was that previous resistance and the 61 fib, and then formed a pin bar. So what we have here is very bullish price action in terms of the pin bar bouncing off support, mixed with the sentiment that everybody, before it happened, was calling 7,600 to be the bottom. And then when it hit 7,600, it formed a pin bar. I mean, pretty much everybody was saying, yep, that's the bottom. There we go. We called it. It happened. Bingo. Got our bids in. We're going to the moon now. Then the following day, we form this candle here where we've got a long wick on the bottom, but we have an up day. So that's another bullish sign. So we have all of these things coming together to make almost everyone think that we've found the bottom and we're going up. And that is the reason that I thought we were going to find new lows. Just to shake some people out, just to confuse people, cause panic. Because as I said, the way that the money moves from the 90% into the hands of the 10% is when the 90% all have a very similar opinion and they're all wrong. So in this case, we had half of that equation in that everybody, or nearly everybody, had a very similar opinion. So the second piece of the puzzle was they all need to be wrong. And what needs to happen in this case for them all to be wrong? Simply, we need to find new lows. We need to break this 7,600 low. So that was the general thought process that I was thinking as to why I thought we were going to find new lows. Just to shake some people out. I didn't think we were going to go crashing down to 2,000 or 3,000 because that's far too far to simply be shaking out the weak hands who got in at 7,600. We just needed to probe a bit lower, shake out those weak hands, and then continue up. So a byproduct of that is the bottom will be a V bottom because it will probe down, it will shake out the people. Once those weak hands have been shaken out, we just bounce straight up and we get this V bottom formation. So that's what I expected. And that's, as you can see on here, if we zoom in a bit, that's basically what I drew on, is that so I have these two lines here. That was more just to pad out this ascending wedge a bit more. Then we would break down. Exactly where we would go, I didn't quite know. I just knew that we would break this 7,600 low. Or I say I knew. I speculated. I didn't know. Anything could happen. But I thought that we might break this 7,600 low if we were going to go down. Then the exact point I drew here was about 7,000. I mean, that was roughly a guess. It's round figure. If we zoom back here, we've got a little bit of support back here. But I mean, nothing major. Nothing to make me think that that was a major level that we would stop at. It was more of just a guess. The general idea is I wanted to draw a line that broke this 7,600. And then the exact point was somewhat of a guess. Then we have this V bottom, as I expected. And then after that sort of thing, we're going to consolidate. We're not going to go straight parabolic again. We're likely to just do some price discovery and see what's going on. And that's what this was. And I drew this roughly in the middle of this range we have in here, because price has somewhat been accepted in this area. It has found a lot of choppy price action in there. So I thought coming back into that zone to consolidate would be a good place. And then from there, we would break out, and this breakout here would coincide with a break of the bigger descending wedge. So that's what I thought, and we can just start the replay here and see what happens. So here we break down, we find some support here at the bottom of this wedge, which does give me a bit of confidence that the wedge is in play. We're just going to probe lower just to shake some people out, but the wedge is still in play, which means that all of this is still quite bullish. So if we continue playing, there we go. We had that breakdown and pretty solidly broke down through it once we got through this 7,600. So we did have a bit of chop here as we got to the 7,600, but then we broke firmly through straight down, and we got down here to 66 and bounced pretty significantly. And at this point, I was quite shocked because I thought, if that's the exact bottom, I've picked it almost perfectly. But as we see, I wasn't quite that good, and it did find some further downward action. And we bottomed here around 59.50-ish. And then from there, we found two pretty big bullish candles. But the significant part here was the volume. So if we see this bottom here at 7,600, we had a little ramp up in volume and then a big spike on that lowest candle, and then a ramp off again. But as we see here, we didn't quite reach a single candle with the same amount of volume as that one at 7,600. But what we do see is a very consistent high volume across all candles. So that's a really good indication that this is a zone where people are finding value. There are a lot of buyers coming in here because they think it's a cheap price. So that's a good sign, and made me thought that maybe this might be the bottom. Of course, you never do know, anything can happen, but it's a good sign. And then from there, we went straight up almost in the exact sort of V bottom formation that I expected. Once we get back into here, into the wedge, we find a bit of resistance. We chop around a bit, and then we break firmly back into the wedge. So from here, I expected some consolidation. I knew straight away once we got into this zone that the time that I'd drawn on here that we would consolidate for was just totally wrong. I mean, it was kind of silly of me to think that we would only consolidate for a short period of time like this before breaking up. After such volatile move like this, we're always going to consolidate for quite a period of time before we finally gain the confidence to start moving to new highs. So yeah, anyway, we just sort of bounced around. Notice we find solid support here at the bottom of this wedge. And we continue to just bounce around, coming up to the top of the wedge here. And then we find some resistance. And interestingly, at this point, we have two minor highs here. So that's some resistance across here. And then a bit of chop here in the same zone. We break high and find resistance on the wedge, and then come back down to find support on this previous resistance. So at this point, we're kind of stuck between a rock and a hard place. We've got this wedge that we're finding resistance at, and we've got these former resistance points that we're finding support at. So that was a pretty critical juncture. We were either going to break violently upwards, or we were going to break back into the wedge. As it happens, we broke back into the wedge in this case, and then we continue to try and probe the top of the wedge, but can't quite find it. And then we eventually do break out. But at this point, I got to admit, I think that the wedge is somewhat superfluous. It doesn't really play much of a role. It's sort of been a general guideline. It's been a good guideline up until this point, but I don't think it's really that important. But it was on the chart, so I still continued to pay attention to it. And then from there, we just let it play out, and we do consolidate further, and then we start to break upwards, make local highs, and then there we go. I mean, I can stop playing it at that point. As you can see, the timing that I drew onto this projection was not that good. I had a much shorter time period than I should have. But if we do stretch this out until that point and then move this line out to there, I mean, it's pretty spot on. And I'm not saying that as a way of sort of blowing my own trumpet, because I do think I got very lucky here. And if I did this 1,000 times, I would be wrong 999 times, as most traders should be and will be. And anybody that claims otherwise is just straight up lying, because you can't do this. And in fact, this isn't even a tradable plan. It's not a tradable strategy. This is just a fun thought exercise and a projection for how I think the market's going to go, as a way to mentally stimulate your mind and think about the different ways the market can move based on the knowledge that you have. And sometimes you'll get it right, sometimes you'll get it wrong. But when you get it wrong, you will learn a lot. And when you get it right, it obviously feels good, and you'll still learn quite a lot, because there'll be some things you didn't quite get right. So something like this is a good exercise. But as I say, it's not a tradable plan. So a lot of people see me making calls like this, and they just want to plow into the market because they think that somehow I have a magic crystal ball and I can see exactly what's going to happen. I mean, that's not true at all. So as soon as it starts breaking out, some people might want to go short because they're like, oh, it's following your trajectory. But I wasn't short there because I might have thought this might happen, but there wasn't a setup for me to get in short. So that's the thing here. These are just thoughts and ideas of things that could happen. And you should have many of these. You should never be set in stone on a single idea that the market's going to go exactly like this. You should have lots of ideas and always be continually updating your plan, because every new candle that prints on the chart is a new data point for you. You can continue to iterate your plan because you have a constant evolving amount of knowledge of the market as every new candle comes through. So always be thinking about what might happen, what could happen, where are the areas that the market's likely to react to, where are the areas you want to do business in, all of these sorts of things. So it's just a fun exercise to do something like this, to plan an exact trajectory, but it's definitely not a tradable plan. A tradable plan does not try to predict the market. A tradable plan purely outlines the key areas where the market might do something, and then when the market comes into those areas, you start looking for a setup. Maybe it's price action or whatever, maybe it's an indicator. Whatever your particular strategy and plan dictates, that's what you're looking for. But this alone by itself is nothing. But this is a good start. If you can have lots of ideas like this and hone your skills of seeing what the market is likely to do, then you can start to build strategies and plans around it. So I hope you've learned something in this video, and until I make another one, I will see you next time.